Hello, traders. It's 8 a.m. Chicago time on Tuesday, the 2nd of June, 2020. Thanks for joining me again. This is episode number 1767. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, U.S. equity indices, chief of which is the S&P, is the big dog, gapping up above yesterday's range, which was higher than Friday's range, although it closed a little bit below Friday's close. The S&P yesterday clearly did not want to give up any territory to the downside and ended up pushing higher and closing pretty strong. The leader this morning is crude, pushing through the 36 even handle, trading at 36.03, up 59 cents or 1.66%. The Euro stocks and the DAX follow. And then the Russell comes in trading at 1,416, up 11.5 points or 0.82%. The Dow's up 122 points. The S&P is up 10.25 points, 0.34%. The Nasdaq's up 18 points or 0.17. So gold is at the mid 1700 figure. It's at 1751.7, up $1 gold climbing slowly. The yen is the weakest of the futures that I'm watching, followed by the bonds, which are down 10 ticks, and then the notes are down 2.5 big ticks. So that's where we stand this morning in terms of risk. Risk allocation is slightly to the risk on side. In terms of news or what's scheduled for today, we don't have very much on deck for today. Some numbers out of Great Britain. We do get the U.S. API crude oil stock change at 4:30 Eastern. The prior is 8.7. No estimates. And then this evening we get Australian GDP at 9:30 for those who trade those markets. And that's where we stand this morning. Not much on the calendar. Not much on the calendar other than that. So let's hop right in. And where is it? Oh, okay. Let's hop right in and look at what was expected yesterday versus what we got. By the way, I figured out how to turn off these YouTube advertisements, so now you can watch the Trader Bite recording advertisement free. I've found that some of the ads in there are really terrible. So here's what was expected yesterday. Scenario one on point. I did expect a dip into 3021, 3020 area. This is a key area in the region. In fact, we've talked about the 20 handle, the 20 handle at each century figure, 2920, 2820. These have somehow played a lot as a line in the sand support resistance, and and overall have been holding up well. Yesterday, the expectation is we would open up. Remember, we're opening in range, in value. We were opening up with a pullback. We were opening up in range in value. We were right at the composite, the prior day's low volume node, which was Friday at 28. At 28. And which was the IB high on Friday, and I expected a pullback to 3020, but I was looking for the pullback to act as a base for the market to push through the 3055, 50. And recall yesterday that the overnight high outlined here, it took out the prior day's high outlined here at 3055 even. It took it out by a tick before falling off and coming below the overnight low. And so the expectation yesterday is we're likely to take out the overnight high, more likely than to take out the overnight low for the overnight stat. Here's what actually happened. You can see we could fit the whole thing into one screen here. at the same pixel per bar, and tells us that there weren't that many rotations yesterday in this Renko chart. This is why I don't like time charts for trigger charts, because I don't really need to see an additional bar just because time has passed. I'm not my charts. I'm not interested in my charts being recording the passage of time, which is, continuous, consistent, and infinite. I want to see bars form when actually something happens, and that's why I'm generally, at least since 2005 or so, 2004, 2005, when I switched from being a very, very high volume scalper, market maker, to structured trading, I was more attracted to volume bars, bar forms on the number of contracts. P&F bars I think are great. And then I've looked at range bars, and I've looked at Renko bars, and I've settled on Renko bars, been using them for some time, probably 7, 8 years now. But yesterday was definitely a grind. You could see that we opened up and we tested down into that area I talked about, the 28, 29 area, beautifully tested down. We had a very clean, I mean, if I was to pull an example of an open auction and a clean opening swing, this would be one. You could see the market move down to 27. Selling was shut off. Buyers came in, pushed higher into 37.50, and then crisscrossed the opening price, which are these green dots here, crisscrossed, and it traded both sides above and below the open. This is what's called an open auction. An open auction, and then the open auction broke the opening swing on the buy side, which tells us immediately, there's no action to take here until this particular move happened, and then from there it is about finding a pullback, finding an area to get long and to lean against that gives us a reasonable amount of risk. So you have this prior high, you have the mid, you have VWAP in this area, but this holding on to this was really difficult. It's really a grind. I mean, these trades were taking a good half hour or so to get past the first scale out. And then we ultimately went and took out the 30.55 even, took out the overnight highs expected, and finished at the top of the range. That is scenario one, pretty much on the dot. So you could see here, pullback to 30.20 is what was expected. We expected it to open at 28 or so, pullback, but the idea is we have an impulse up and then grind up into the through the prior day's high, and that's what we were looking for yesterday. I really was looking forward to it testing below, but it did not. Sellers do not seem to be participating in this at all. You can see the delta here was completely flat in the open auction range, and then started to pick up once we get our first impulse. But it doesn't matter, because it's that impulse that tells us, is the first indication. It doesn't really tell us. It's the first indication that says, hey, which side is stronger? We're looking for that impulse. I always outline an impulse in these scenarios, and that's the direction we look to trade from. Okay, so yesterday was a normal variation day with the point of control shifting to the top of the range. It is kind of a double distribution profile yesterday, like that. Short covering, the shorts were getting pushed. 30.50 is the low volume node in between. And then this morning we're trading right up here at the upper part of the range. We're pulling back a little bit. We're inside of the weekly high of last week's high, so we're inside of last week's range after gapping higher, and the point of control is above, the overnight point of control is above at 30.6775. That's the configuration we're in currently. We have now taken back that 30.50 and are holding above. We're likely to continue to rotate higher. As price remained above the open, this is the X price here, right? This is the delta between the open and the close. you could see that the volume delta, I shouldn't have used delta here. I should have used the price difference. The volume delta wasn't wasn't very strong yesterday. It came right back to the zero line in this closing grind, this closing channel down. It came back to the zero line down here, and that doesn't show a lot of confidence from the buyers into the close. Like there was a relatively muted selling, but still there was selling yesterday into this new high. It seemed to poke through and just make these deep zigzags. These are really deep zigzags, a very orderly channel formed here, which we've broken above. So we've broken above it in the overnight session. I do believe that those who are still trying to explain away the terrible conditions and why the market shouldn't be at these prices, those people continue to pay up either through their options trades or equities or whatever, short equity, short futures, hopefully not short futures. That can get really expensive. Um, they're still paying up, and it's just the market's not giving up any territory to the downside. Looking at the overnight session, we immediately pull back, so we continue that shift down, that channel down here. We continue the channel down from yesterday, and we immediately sell off on the open, consolidate through the Asian session, and then we finally get above the mid here, and then the European open is somewhere in here, and immediately we rally on the European open, and we're pulling back a little bit. We're still above the mid, above VWAP, above the prior close. Overnight inventory is about even for long or short. I believe it's even. And so we're holding this area. So we're looking at 30, 55-ish, 30, 55-ish, 53-ish as a potential line in the sand here for this morning to see if the market gets support and continues to push higher. I'm seeing a weak high on the overnight session. I'm seeing decent volume at 327,000. And so that's where we stand. That's where we stand this morning. So the overnight session is saying, yep, we attempted to go lower, weak low. We attempted to go lower, but we ended up pushing higher again. So this is again more pain for the shorts, and it's likely to continue that way. Looking at the overall heat map, you can see that the market has lifted right through these this high liquidity area, just came right through and lifted. You can see there's quite a bit of positive delta pushing up through here. It's letting go a little bit, and here's the 30.55 starting to get some liquidity in it. There's a stock zone there into the 30.50. The prior point of control is in the area. So this area here where you're starting to see liquidity form, the dark color like this area here has little liquidity at that time. The brighter the color, the more the scale goes to the right in this spectrum you see at the top, the bigger the bids or offers. And then the big offer, of course, as you would imagine, is at the overnight high. That's a great place for people to get out. So it makes sense. Um, it makes sense that there would be an offer there, a resting order there for somebody who's already long and is active in the market. So that's where we stand. Again, we're holding above the mid. There's not much we can glean, not much more we can glean here from the heat map. I'll pull up and look deeper, look farther up. Let me get rid of yesterday's volume so we get some more color. So 30.80 is the next key liquidity area above, but you can see that below there's just not much there. Until you get into the 30, 20 to 22, there really isn't all that much being bid, more so being offered. 30.75 for the overnight high, 30.80 for the next area up, and then from there, the 3100, of course, is going to have heavy liquidity as it is a major strike and a century figure. So that's where we stand there. Let's move on and look at what's expected for today. But two things. One, I want to make sure that everybody here is aware of this webinar that I'll be hosting with edgeclear.com, with the small exchange. A small exchange launched yesterday. In fact, hang on, I wanted to show you this. You're witnessing the birth of a new exchange. Here's the small 75. This is a stock index made up of 75 issues. You could see in the heat map that it's still quite irregular, lots of one lots, lots of gaps and things like that. You might look at this and say, well, that's not tradable. This isn't going to go anywhere. In my opinion, it will. This is a product that is in demand. It's a dollar per tick product, and it's not a standard product like the S&P and so on. You can read all about it at thesmallexchange.com. But it's doing better every day. Yesterday it traded, I forget what it did actually. I think around a few hundred contracts, or 600 or 700 contracts. This is the precious metals contract right here. You can see the market maker, automated market maker here interacting with the market. But it's 2 lots and 4 lots and so on. It's doing okay for a second day after birth. And then this is the US dollar basket. It's relatively quiet for the time being, but these are products that are interesting to look at. Again, that exchange is offering fee waivers and membership, lifetime membership. It's really at the beginning of its life. Here's the webinar that we're holding tomorrow, and I want to make sure that you're aware of it. I'd like you to attend or register. Of course, if you cannot attend, if you register, at least you get the recording. We're hosting the small exchange. The folks from the small exchange will be allowing, it's more of a panel discussion. We'll be allowing for Q&A, and this gives you access directly into the exchange's creators and marketing team and so on, so you can ask questions about products and where the exchange is headed. This is for next Tuesday, June 9th at 4:30 Eastern. I put the link in into the chat, and you can click on it to register. Again, this is for next Tuesday, June 9th at 4:30 p.m. Eastern. Okay, it's hosted by EdgeClear. So let's move on and look at what we're expecting for today. So for today, we're still hovering just above the prior range, and hey, between now and the next 12 minutes, it could drop back into the range. But if it starts where it is now, it is very, very likely to respond down. It is below the overnight point of control. It's likely to respond down and come right back into yesterday's close and point of control, and potentially push into the 30-50. Remember, the 52-53 is expected to provide some support here, and I'm expecting it to be another grindy day. I really am not looking for this to be a fast trade. I think the market's kind of on hold, and we're in this pattern, the typical pattern, rally pattern, where range compresses, volumes fall, and the market just grinds up. You know, the old saying from, I don't know, 80 years ago is, don't ever short a dull market, and don't go short a dull market. And the tendency is people funds invest. They're more likely to go long than short. Funds invest, they commit their dollars into a position, and then more money is being committed as the price goes up, and more money gets committed, and so on and so forth. And so it becomes a grind because there's not much to do once we're in. So a dull market tends to rally, and a dull market's made up of tighter ranges, smaller volumes, lower volatility, the VIX drops, and so on and so forth. I'm looking for this to grind its way up into the 30-80 liquidity, consolidate at this liquidity, and pull back a little bit into the close. So same thing as yesterday, continued rallying. We had a low on Friday. We had a higher low yesterday, so we're starting to one-time frame up, and I expect a higher low today to confirm the one-time framing up, and then we'll likely continue up into the 3100. That's the main plan for today. If we do get a splash higher, um, if you do get a splash higher, I'm looking for it to push immediately into the overnight point of control, into that double top, and test it, and then looking for an impulse down as the buyers are exhausted, as the delta yesterday was kind of telling us. Despite the rally yesterday, there wasn't all that much aggressive lifting, and then we're likely to come back into balance down here and then start dropping through and through the yesterday's range and potentially push as far as that 30.29 yet again. Although that could be pretty aggressive. But so scenario two down here, or potentially down here, or potentially all the way to the 20 down here, and that could reverse things. This would put in a lower high, which would quickly end the one-time framing up, and we're looking for, then on Wednesday, we would look for a rotation down to 3008 and 3000. These become the next big areas down. Okay, so that's what we're looking at there. How we finish today is going to be important, because if we finish higher with a higher low, we're looking at more of a short squeeze, and we are likely to continue through 3080 and push into 3100 and get back the 31 handle. Really, the market's really clawing back the territory it lost in March. And so remember, I think it was March 6th or March 9th was the low at to 20, what is it, 2100? So it's really clawing this back. That's where we stand today. This is out of range, so we might get an open test drive. This is the kind of day where I'm going to sit out for the first 15 minutes and just watch carefully what they do at the beginning before stepping in. Okay, please remember to sign up for next week's webinar with the Small Exchange. These are products being made for online traders, and I'm a huge advocate for whatever supports the online trader. That's why I created EdgeClear. And so I really want to support this exchange and see it become successful. Good luck today, and I'll catch you tomorrow morning. Take care.